This episode of My Two Satoshis is brought to you by BetMatch.io. Have a gambling itch to scratch? Then get over to BetMatch and try their wide variety of sports betting genres from football, baseball, basketball, MMA, and even UFC. BetMatch offers transparent betting on the blockchain with co-guaranteed win payouts, and funds are always in your control until the bet is lost. Visit bitmatch.io by visiting the link below and start gambling transparently today. Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is Friday, September 6th, 2019. Shout out to my man Philly Blunts out there on YouTube for the song request today. Snoop Dogg, that shiznit. Oh man, this is a throwback right here. Thanks for the song request, Phil. And what's good, people? Hope you guys are doing well today. Welcome to another episode. Today we are going to be looking at this massive sell-off we just had as I'm recording it. And the crazy thing is, last night I put out a tweet saying you buy the rumor and sell the news. I thought we would see a sell-off on the day or after the Bakkt launched with their institutional investors, which was supposed to be, well, I thought was supposed to be today, but they were just opening up for deposits and withdrawals for institutional investors today. They're actually going to be launching on the 23rd of this month. However, it does look like they still did buy the rumor, sell the news, or it could be a number of things. It could be something totally unrelated, like $1 billion being moved around from one unknown wallet to another. We're going to take a look at that in a second. Maybe that's the reason for this dump. I don't know. They paid over 20 times as much as they needed to for this transaction. $700 is still not bad for moving $1 billion. Try doing that in the legacy system. It will cost you probably near $1 million to do so, at least $500,000. But anyway, we're going to take a look at that article. And again, this is what I was referring to. Bakkt warehouse launching deposits and withdrawals today. That happened September 6th. Again, I thought they were actually opening up for live trades on today, but that's not the case. But anyway, we'll still take a look at this article. They'll be launching on the 23rd, so you may still see another buy the rumor, sell the news leading up to the 23rd. That's just how it goes, people. I've been trading for a long time, and it doesn't repeat, but it definitely rhymes as far as history and how the patterns of traders, the market, they're made up of humans for the most part. And even if there are algos, the algos are going to pattern other human behavior. And then lastly, thought this was a neat one to update you guys on. Hardware wallets just got a bit more secure with Trezor's Shamir backups. So we'll take a look at the details on that. And hopefully you guys will start implementing this into your backups as well. But first, let me give a shout out to my people over there at Moon Lambo. With the whale discount, you spend over $200, you save 25%. Or if you don't want to spend that much, you can always save 10% if you use the word CryptoBlood10 at checkout for the promo code. So check those guys out. But let's get into it. The heat map for today. Bitcoin down 1.1% right now to 10,435 bucks. Ethereum down 0.5% to 171 bucks. Litecoin up though 1% today to 65 bucks. And then we've got EOS up just almost 1% to $3.25. They've been getting battered really badly here. BNB down 5% today, but it was up like 10% yesterday. So it's taking back some of those gains. But if we take a look at a month performance on Bitcoin, it's down 12%. Ethereum is down 24%. Litecoin down 27%. Binance down 24%. And EOS down 23%. As you can see, the alts getting hit much harder than even Bitcoin and Bitcoin Cash. So the bears are taking a toll more on the alts than they are Bitcoin. Hence why I think a lot of capital is fleeing from the alts into Bitcoin, not just going into USDT or any of the other stable coins. But as you can see, look at what happened, people. We touched the top of that ascending triangle and got smacked down. And guess what? Where did we end up bouncing off of as far as right now? That doesn't mean that we're going to keep this line, but we did bounce right off of this trend line that I had drawn here for you guys. Let's see if we can hold it. If we do not hold this, This is not a good look. I have to say, this will not be a good look if we cannot hold this area, because then that breaks the whole pattern here, and that would almost constitute as a triple top. I mean, if you look here, that's one. I would count this as two, and then three. So 3 strikes, you're out. We'll have to see what happens, though. I will keep an eye out on this, though. This is a critical area right here. We got to keep this area. If not, we head lower to test probably 9,300, that area again. Let's look at this first article. Maybe this is why we had the dump, or maybe it is the Bakkt exchange. Buy the rumor, sell the news event. Someone just moved $1 billion in Bitcoin for $700, overpaying 20 times. It says that a $1 billion Bitcoin transaction has become conspicuous not because of its size, but because its sender spent far too much on fees. Social media users were guessing at the origin and destination of the funds on September 6th, which involved 94,504 Bitcoin, which equals $1 billion. According to Twitter-based monitoring service Well Alert, the transaction did not involve known wallets or those belonging to a specific cryptocurrency-related organization, such as an exchange. One theory suggested the funds may be tied to institutional trading platform Bakkt, which begins accepting clients' deposits today. This is what I have to imagine is the case as well. My man Max Kaiser, which I just put the full interview out while he was here in the D. I hosted him for the Max Kaiser Bitcoin Rage Tour. He said institutions building inventory for their market making needs going forward. That's very true. He also added that this equals an effective put on the Bitcoin price at 9,000, as I've been reporting for several years now. Institutions are net buyers of any Bitcoin that shows up at 9,000. Risk reward now for buyers is excellent. Good point that Max Kaiser makes there, and I have to probably agree with him on that. I don't think we're going lower than 9 at this point. If we do, there's some major issues, and we'll see a precipitous sell-off. But again, I don't see that happening, people. I think 9,100, to be even more exact, that area is a floor for us. Its senders, the article says, who may have been sending funds to themselves, nonetheless selected a very high fee rate. At 480 Satoshis per byte, the fee totaled around $700. Bitcoin fees can vary depending on how quickly the sender wishes the transactions to be processed by miners. Many wallets allow manual fee setting. The more money paid, the fewer blocks a user must wait for the transaction confirmation. Under current conditions, getting a transaction included in the block, maximum 10 minutes, is just 23 Satoshis per byte, meaning the $1 billion sender overpaid 20 times. The funds could have settled in around 10 minutes, paying a fee of just $35. Bitcoin's fees remain low in 2019 despite the cryptocurrency's rapid rise in price. As Cointelegraph reported, the situation marks a stark contrast to 2017 when Bitcoin circled all-time highs and fees grew in step. At the time, developers of projects such as controversial Bitcoin Cash aimed to take users away with the promise of lower fees. The total hash rate of Bitcoin, the amount of computing power involved in the mining process, continues to reach new highs and is now more than 1,000% larger than in September of 2017. That's crazy. But there you have it. Someone moved a billy around. I think personally it was in preparation for either Bakkt or one of the other Bitcoin backed features. We've got Ledger X, we've got Iris X. So there are a few that are getting ready to ramp up. Who knows which was the one? And I guess we can look at this Bakkt warehouse launching deposits and withdrawals article now, since it is related to what we just read. Bakkt warehouse, a qualified custodian of crypto trading platform Bakkt, is now accepting customer Bitcoin deposits and withdrawals. It says, as the company tweeted on September 6th, Bakkt warehouse has officially launched in accordance with the plans revealed on August 28th. So the launch of Bakkt warehouse comes as the company prepares to roll out its platform for Bitcoin daily and monthly futures in the United States on September 23rd. The platform will enable 2 types of physically delivered Bitcoin futures with end-to-end regulated markets and custody as previously reported. According to the Bloomberg report, Bakkt will be the first platform to offer physically delivered Bitcoin futures if launched successfully, in contrast to the existing cash-settled Bitcoin futures offered by the Chicago Mercantile Exchange and the CBOT, Bakkt's physically settled futures will enable clients to receive payments in Bitcoin once the futures contracts expire. And so it goes on to say, once launched, trades will take place on the futures platform run by Bakkt's parent company, ICE. So yeah, there you have it. I personally, and I talked to Stacy and Max during my kicking it session when they were in town. You know, my concern is with this whole physically backed futures. I think that it's better than having the cash settled ones, but in my opinion, it affects the price, the spot price of Bitcoin more than the cash settled only ones could ever do. You know, so there, and you guys know this, there's an asymmetrical relationship when it comes to fiat and Bitcoin. Fiat is unlimited. There are only a number of Bitcoins out there. 21 million would be the most that could ever be created, but we know that that's not even what's in circulation right now. So with that being said, if you've got institutions with easy printed money coming into this market, they'll be able to, once they're in the market, of course, they'll be able to drive the price up now. So anyone in Bitcoin at this current time is going to benefit greatly from this. However, in the future, once they're in, right, $100,000, $200,000 Bitcoin, once the cabal, if you want to call it, or Wall Street, institutional investors, once they're in this game, now they hold control over the price of this game. I'm not talking today. You got to think 4 or 5 steps out. We're playing chess here, not checkers. Just think about that. So anyone in the future is going to be at the control of the cabal when purchasing Bitcoin. So just keep that in mind. You know, I keep it real here on the Crypto Blood channel. I don't give you what you want to hear. I give you the information that you need to hear, and that's something that you have to keep in mind. And lastly, out of Bitcoin Magazine, hardware wallets just got a bit more secure with Trezor's Shamir backups. Article says if hardware wallets have an Achilles heel, recovery seeds may be it. But Trezor's Satoshi's lab has figured out a solution. Hardware wallets are generally considered to be among the most secure solutions for storing Bitcoin, as the private keys to sign transactions never leave the device. These keys are never exposed to the internet and can, therefore, not be hacked remotely. Even with physical access to the device, subtracting the keys is no straightforward job. But even if we assume that they are secure, hardware wallets can still break, get lost, get stolen, or become otherwise unusable. For these cases, users should keep a backup seed, a list of a couple of dozen words, typically written down on a piece of paper, from which all the device's private keys can be generated. But what if the backup seeds itself gets lost or stolen? So after more than a year of development, guys, Paraguay's based Satoshi Labs, the company behind Trezor Wallet, has now introduced Shamir backups based on Shamir's secret sharing, a cryptographic algorithm created by well-known cryptographer Adi Shamir. Shamir backups let users split up their backup seeds into several words, lists, or shares. The wallet's private keys can then be recovered by combining some predetermined subset of these shares. Shamir backups allow the creation of up to 16 shares, and individual shares can be even further divided into sub-shares. As a practical example, you could set up a 2 out of 3 backup. In that case, you would generate 3 different word lists, and you would need any 2 of those 3 to restore your private keys. This way, you could, for example, distribute the 3 lists over 3 different locations, minimizing the risk that 2 of them are lost, say in a fire or stolen. If the attacker manages to steal only 1 of the 3 backup seeds, it would be of no use to them at all. Meanwhile, if only 1 of the 3 shares is lost, the remaining 2 can be used to restore the wallet. So this is an open standard protocol, so you guys can get more information about this if you're interested in it by clicking the link in this article. It's toward the bottom here, but just thought I would give you guys that heads up. You can now do that, and I actually suggest that you do split your keys up, or I should say your seed phrase up into multiple shares, just to give yourself some more added security there. But that's pretty much it for today, ladies and gents. Thank you for checking me out today on this episode of My Two Satoshis. Shout out again to my man Philly Blunts out there on YouTube for the song request. This is a classic right here. Snoop Dogg, the Shiznit. Make sure you guys like, share, and subscribe, and click that bell to be notified about unbiased crypto news reporting from a 6-year vet in this game, Crypto Blood. I'm out of here, people. Holla.
Boy, it's getting hot. Yes.